Alright, what is happening guys? Max Kazik here. So in today's video I'm going to be going over my stock portfolio with Trading 212. I finally got my ISA set up, so I'm going to be going over my general account, my ISA account, and overall the market. So today we had a very good day in the market. It's currently, I think we're going to close in about 4 minutes. So the S&P 500 is at 3,105 points, which is crazy. We're going up to those high numbers again, and we're up 1.72% at this time of making the video. So really good gains. My portfolio actually gained a little bit more than that, which is what I'm going to be sharing with you in a second. But before that, I just want to quickly go over my general account. So basically, if we have a look at the history of my account, we can see that I have lost £103 in total, and again my dividends are 11p from Nvidia and 34 pence from Microsoft. So these are the dividends that they have paid. A lot of people have been asking, does Trading 212 actually pay dividends? Here's proof that they do that. Now, the £103 loss was actually my mistake, and it was very stupid. I basically sold the stocks that I still wanted to hold long term to transfer them over to my ISA account. And I've been waiting for Vanguard to transfer my ISA for about 3 weeks. They finally did that, and the whole point was, I couldn't just transfer my actual shares from the general account over to the ISA account. You have to actually sell them and then you can transfer them. So I could have waited a little bit for the market to come back up like they have today, but I just decided to sell and get on with it straight away. So that was like my first mistake in the stock market. Just not being exactly too patient. So if you're in the same position, don't do that. It's a big mistake. Anyway, now we're going to go over to my actual account. All right guys, so we have just closed today at 9 p.m. we are up 3.95% since I started investing through the ISA account, and that is £98.49 gain today. So that is extremely good. Now I'm going to go over some of the stocks that I invest in and hold. So first things first guys, I'm going to show you guys my top 5 stocks that I hold, and they are basically the S&P 500 stocks. So if we have a look at the S&P 500 fund, we have Microsoft, Apple, Amazon, Facebook, Alphabet Class C and Class A. Then we have our Johnson & Johnson, which is a dividend stock. We got our Berkshire Hathaway by Warren Buffett. We got our Visa stock and JP Morgan. I don't hold all of these stocks, so I'm not trying to mimic the S&P 500 because that would not make sense. And obviously with the S&P 500, we have over 500 companies inside of that. I wanted to focus on the tech stocks. So I picked Microsoft, Apple, Amazon, Facebook, and Alphabet as my main, safety stocks, I would call them. They're still quite volatile because they are growth stocks. However, these companies have been established. It's very unlikely for any of these companies to go down. They make up most of the S&P 500. So if the S&P 500 does pretty bad, guess what? These stocks will also do pretty bad. Now, besides those stocks, I also own other ones, which I'm going to go over in this video today. So the first one we can see is AMD. It is a semiconductor company. They make GPUs, CPUs, which are, basically processors and graphics card, mainly for gamers. Now, Lisa Su has really turned this company around. I mean, it used to trade at about $2 to $4 per share, and now we're looking at $52 per share, guys. So extreme growth. My average price for the stock is 49.74 and currently is trading at 52.62. So today the stock is up 4.65% and we are up 4.98%. As far as me buying the stock every single month at that price, I'm not exactly too sure yet. The big 5 I'm definitely going to be investing in every single month. No matter what price the ad, because they just keep going up and up and up. So next one, we got Alphabet, up 3.52% so far on my investment. The average price is 1,358, and this is what it's trading at the moment. Google has one of the best balance sheets I've ever seen. And now I did do a more in-depth review of Alphabet on my last video, so make sure to watch that if you're interested. Next one, we have Amazon. So I own 10% of one share of Amazon because it's very, very expensive. We're up 1.13% on our investment. This company will continue to grow. However, again, guys, with Amazon, it's pretty much at its all-time highs. So, be aware if you're buying loads of shares of this company. Next one, we have Apple. Okay, Apple actually pays a dividend of 0.91%. So that's pretty good for a growth company to pay you dividends. We are up 2.11% on that investment as well, and our average price is 356.40. Next up, we got AT&T. So this is a little bit of a different stock. It's a dividend stock. I own 10 shares of that one, and my average price is 29.23. Now with AT&T, guys, I would only buy shares under $30. If we have a look over here at AT&T's history, okay, we can see that it's very, very predictable. So it's a very stable dividend stock that will pay out all the time. And as we can see here, that it trades at, 52-week high is at 39.70 and a 52-week low is at 26. So ideally, you would want to buy the stock at about $26 per share, and sell at about $39 per share. Now, for those that you don't want to sell, because you can still keep your dividends payments, so you could sell it, or you could just hold it and just keep buying it at the lower prices, and it's very, very predictable, so you know exactly what you're getting. We can see from 2002 this stock is at about $25 per share, and fast forward pretty much 18 years into the future, and we're at about 30. So it's not changed much. You're not going to get amazing growth. However, if you look at over here, you can actually get about 40% growth, guys, in the span of few years. So that is still quite amazing for a dividend stock like this to be returning such high returns. We are currently up 3.14% of this investment. Okay, so some of the more stable S&P 500 stocks, we got Facebook. Now Facebook has actually been doing pretty bad recently, and that's why I've actually bought a lot more shares. So it's gone down from 242 all the way down to 216, and that's when I started buying very, very heavy. I own about 3.5 shares of Facebook. My return so far is 1.53, and my average price per share is 222, which is pretty decent, guys. And you have to consider that Facebook has had quite a lot of troubles recently. A lot of the companies have been pulling out. So, Ben & Jerry's, quite famous company, pulled out all the ads from Facebook. Again, Adidas and many, many more companies have been pulling out. Hence, the share price has gone down in the recent days. And, a lot of investors, of course, got freaked out and they start selling, and that's when I start buying. I always want to buy when share prices go down of good companies. Of course, we're not looking at beat up companies that potentially are going to go down and never recover. I want companies that are stable, and just because the share price has gone down for the past 2 or 3 days, it doesn't mean that it can't go back up again, guys. And for me, it's like I look at that as a good deal. So I'm getting a great deal, and I'm investing obviously in for the future, 5 to 10 years plus at least. Okay, next stock we got Microsoft, and Microsoft again, guys, pays a dividend of 1.04%, and this company does not need to pay dividends, so it's just a very great bonus that they do. My average price per share is $197 per share. I own about one share of Microsoft, and I'm planning on buying a lot more in the future. Next up we got Netflix. Again, I bought this when it went down in a slight crash over here. We are up about 2%. My average price per share, 443. Over the last 3 months, Netflix has returned, over 22%. So that's pretty decent. They've basically continued growing the business as far as during the quarantine and during the lockdown. They obviously stopped all the filming, but they still had all the content that people could watch at home. And that's why the company's been quite successful. Obviously a lot more subscriptions, etc. And I believe they will be growing into the future. They have competition as far as Disney Plus and HBO, which is owned by AT&T. But Netflix is still a leader in that game. I still believe Netflix is going to win this overall. Okay, so moving on to next stock is Nvidia. Okay, so these guys do AI graphics cards again. Now I've known this company from like pretty much 2008, if not 7. I always used to buy Nvidia graphics card. I actually used to build my own gaming PC, so this is a company that I did know for a long time. I just never thought of actually investing in it. If I did buy a few shares at that time when I was playing games, when I was a kid, I would have been up over 2,000%, guys. I mean, that is just insane growth for Nvidia. So I definitely want to own the company. Right now it's trading really high, guys, so I wouldn't recommend buying it. Again, I'm not a financial advisor, so don't listen to any of this advice. This is just for entertainment and educational purposes only. So far we're up 1.73% on this investment, and my average price is 373. They also pay a dividend of 0.17, which is pretty good for a big growth stock like that. Next up is PayPal, and I own one share of PayPal, again at all-time highs, pretty much due to the pandemic. A lot more people are processing payments through that platform, and clearly PayPal is benefiting very well. We're up 3.10% on that investment. Probably not going to be buying more shares at the minute. It's way too high at this stage. If it goes down a little bit more, I will be looking into buying a little bit more of PayPal. And last but not least, guys, my favorite all-time stock, Tesla. Okay, Tesla just hit all-time highs again today. Yesterday had a very good day, and today we're at $1,079 per share. We can see this article here: Tesla on track to beat Q2 deliveries forecast, analyst says. So very good news for Tesla, and basically a lot more people started buying into the stock. Tesla stock jumped 7% ahead of quarterly sales. Today we're up about 7%. Average price for this stock is $958 per share. I just want to mention one more thing, which is dollar cost averaging. And this is basically an investment strategy in which an investor divides up the total amount to be invested across any purchase that you might have, and you would basically invest, let's say, every couple of days or every week or every month. You wouldn't just put everything in to try to time the market. I always say to you guys, it's all about the time in the market, not trying to time the market. So basically, if we look at the recent crash that we had, you could just essentially try to time the market and buy at around here, or you could just dollar cost average and buy here, buy some here, and buy some here, and keep buying every single month or every week, depending on what your investment strategy is. A lot of people think that you can just try to time it, and some people just get it wrong, and you might think, oh, it's gonna go lower, and you just miss out an opportunity to buy a stock or a fund at a very good price. So that's what I've been preaching the whole time is, you know, with the S&P 500 before, when I was with Vanguard, I would just buy every single month. So I actually bought here, I also bought about here, and I also bought dip. I just bought every single month in the same amount of money that I wanted to invest, and that's exactly what I did with Facebook. I bought around here, here, and a lot around here. I think it was like the second or the third day where Facebook was going down like 7%. So I knew that, you know, it's going to bounce back very quickly after that. But that's basically it, guys. So I hope you guys enjoyed the video. I'm just trying to share exactly what I do with my portfolio, and, you know, you guys will see all the moves that I will be making. I'm basically trying to create wealth, you know, from nothing. These are all my savings that I've been saving for, you know, just over a year. You know, before I couldn't even invest, you know, I didn't really know about investing. And back then I was just, you know, saving a lot of money but not really investing anything. And it's really, really important to actually invest, guys, and grow your money. Let your money work for you rather than just, you know, keep on saving. You'll never get rich just saving. But besides that, guys, if you enjoyed the video, smash the like button, comment down below, let me know what you want to see in the next one. If you want to grab a free stock, click my link down below, and if you sign up and deposit £1 into your Trading212 account, we will both receive up to £100 worth of a share. That's it. Comment down below, subscribe if you haven't already, guys, and as always, we'll see you in the next one.